Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, all. Ira Epstein of Linn & Associates with your financial market wrap-up, and this is for Monday, the 6th of November, 2017, and I'm early. I'm about just after 3:30 p.m. Central Daylight Time. Stock indices just now reopened again, and as you can see, in the last half hour of trading, the market is so far staying up pretty well. Metal markets have stayed up all day. The event over the weekend was the Crown Prince Salman purged. Saudi Arabia is really rich. 11 of the princes were arrested. They are sitting in a big jail at the Ritz-Carlton. I know you think I'm being funny. I'm not being funny. The jets have been grounded. You need a special permit to take off. And they're now starting to decide to be sweeping the bank accounts of those princes. They're looking at certain ministers. Several were let go, replaced over the weekend. And, of course, we've got prominent businessmen. Now, understand, if you're really super rich in Saudi Arabia, do you think you're keeping most of your money there? Got my doubts about it. But any way you go about it, the market's trying to figure out what it all means. And the first reaction was in the energies. And this is powerful. I mean, you're near $60 a barrel in American crude. So if the shale producers are crying, they can go out and take a look at further back months, which are probably lower, not higher than this, but not dramatically lower. Can they do any hedging? That's the first thing you ask yourself. In terms of the Saudis and Russia, well, the OPEC meeting's coming at the end of the month. The odds favor that they're going to extend these production cuts well into 2018. You know, when you got something good going, you don't take a pin and pop the balloon. You let it keep going. So you do that. They're making more money with basically the same amount of barrels that they have said that they were going to cut. I think they'll stay right with that. In the U.S., we're looking at the tax bill. Where do you go with this? As I'm reading this bill, it is certainly geared for the rich. That's not to say that certain income brackets won't for a while see a little bit of a benefit, but it's highly done for the super rich. And if you try to get away with that with the carried forward interest, limiting mortgage deductions, you know, one of the biggest assets most Americans have is their home. Now they want to stop the next generation from that? Ridiculous. That's how I feel about it. In the Dow, the market has gone from 20,414 on a weekly basis to where you're at right now, 23,492. You know, there's story upon story, the flattening of the yield curve. There's stories that we're starting to see that the tax bill is going to add $1.5 trillion to $2.5 trillion over time, and it's really not going to give you additional growth. On the other hand, the trend is up. You don't fight the trend till the trend is over. It's really that simple. When you look at how the daily area chart of closes has gone, it's gone straight up. Eventually, gravity will grab hold of this market. Don't be the hero picking it. If you're going to be wrong from the long side, not from the short side. When you take a look at a daily bar chart, you've been going basically sideways, and now you're trying to lift one more time. And in that lifting process, the swing line has got higher lows and higher highs. Now, today's action in the market, if you look at the high at 23,507, the high on the day on Friday was 23,494. I would think that you don't want to see today's lows taken out, otherwise you'd have what's called, you've got an outside day up at an all-time high. You take that low out, maybe traders will view that as a negative. I don't know until it's finished, but the trend of this market is up. You have not been able to return to the 18-day average of closes since September. The market just keeps going. And the Bollinger Band is in the 23,600 level, about 120 points away in round figures. So not a hard number to get up to. Momentum, this is what I watch. Whenever I see an embedded reading occurs when, let me step over here. When a market first gets overbought I define as in the slow stochastic reading, when the K and D numbers, either one gets over 70. Then when both get over 80 and start going sideways, I say the market changes character. And that character is to locking in a trend, and until the red line gets back under 80, that trend's in place, and so far that theory is holding up. NASDAQ just embedded, going up to the upper Bollinger Band. Until you have reason to back off, this market's bullish. Now the S&P 500, well, it's not as strong as the others. If we look here, both numbers are over 80 today, but they weren't there on Friday. So this is just an overbought market. And the weakest of the whole group has been the Russell. And the Russell today again tried to get to the 18-day average, didn't do anything. This is one to key on. If you see a downside breakout of this pattern, it could be a warning sign for everything. It needs to join the parade. This sideways action always has me thinking, is it a base to move higher, or is it creating a top to move lower? So I watch it. In the VIX, all you did on Friday is you went down to the lower Bollinger Band and you bounced. You're oversold, but the trend is lower highs. And this high right here, I double-checked, is the same high as this one. So you got a double top. So you got lower highs, clearly lower lows. You're still in the downtrend. In the T-bond market, you got higher lows, higher highs. Let's see if the market can get up to the to the upper Bollinger Band than what it does. In the 10-year notes, we seem to be running here at the upper Bollinger Band in an uptrend and the 100-day average for resistance, but you are overbought. You do realize interest rates have been taking a hit as the yield curve is narrowing. In the dollar index, the market's got a lower low, a higher high. It is trying to embed. It's got 2 days. It needs another day where both numbers stay over 80 to embed. Euro currency's in what? It's got no trend. It's got a higher high and a lower low in an oversold condition. Aussie dollar drifting here in an oversold condition. The yen takes a stab at the downside, a big reversal today from that. And when I look at the energy markets, and I'll end there right now, you've got a widening of this spread, so the U.S. crude wins by default in some areas. I want to remind you all of Linn and Associate Research. As you can see, we write on a number of products. Now, those products and those markets, they look like this in our different reports. These are the different categories you can choose from. You can see one after the other as to how they're going through here. I think that, if you're a serious trader and you're looking to see what our firm, via our affiliates and all, are putting out in proprietary writing, you probably want to get your hands on this to at least test it. How do you do that? You can call us at 866-973-2077. You can go to our website at www.iraepstein.com. You can always go, if you're watching me on YouTube, you're going to see an icon up here on the left-hand side, right through here. Click on that, or underneath us on many websites, it says, click here for Ira's free information. I'm Ira Epstein. You have a good day, and I'll see you tomorrow.